well, as BP looks set to emerge a leaner company. What other changes should we be expecting? Well, for more on the shake-up in the oil industry, Jan Randolph, head of sovereign risk for IHS Global Insight, is with me now. And Jan, how difficult is it going to be for BP to really overcome the clean-up costs, the liabilities from this spill?
Well, the recent measures it's taken is clearly trying to make a break with the past, to raise some money, to account for all the expected losses, although there's still an open question regarding total liability for the company. But it has got assets. These are valuable. The oil price has been relatively stable within the 1790 range. That should make it easier to value these assets and therefore to sell them over the next 18 months. And given the global economy is slowly getting back on track, particularly the emerging markets, which are resource hungry, of course.
So it's a good market for potential for asset sales right now.
It's been a relatively stable market to price these assets, and the long-term future is very good for resource companies.
And as we keep hearing, these asset sales are likely to result in a slimmed-down company. Is that a good thing or a bad thing?
Well, I think it was important to get some consolidation of the company, both financially but also in terms of its real businesses. So you've got a clearer window for the future. I think, the point at which BP had grown so large over so many years has ended. Now, with a slightly smaller company, they may have better controls in place to take the company forward. So
does that increase the potential for future growth?
A lot of it depends on future demand for oil and gas. That's quite promising. But quite frankly, for the industry as a whole, from the perspective of a Western oil company, energy company, there are limited assets out there. Most of the real assets under the ground, oil and gas, are still behind state fences, as it were. So there are limited opportunities in terms of the kind of assets that are available over the next coming years.
And as you say, it is a question of accessing the reserves that are already there. So with that in mind, to what extent will potential regulation on deep water drilling impact those prospects?
It will obviously, the net, as it were, is going to be more restrictive in that sense. If oil companies cannot access oil and gas behind these state fences in the Middle East or elsewhere, then they're going to have to look at these other places, and new regulations on deep sea drilling will be more restrictive.
Of course, at the same time, we've seen BP, of course, start deep water drilling even deeper, in fact, in the Gulf of Mexico off the coast of Libya. So even amidst this turmoil, it is still managing to win new contracts for deep water drilling.
Yeah, I mean, it's ultimately opportunities like Libya boil down to how far they can negotiate with the state owners. But these do present themselves of opportunities, and Libya is a very promising market.
OK, Jan Randolph, head of sovereign risk for IHS Global Insight, thanks so much for your thoughts.